Hello and welcome to this week's episode for SPY Trader Now. I am your host. My name is Ken, and our model portfolio is up 7.71% year to date as of September 2nd, 2023. Here is our portfolio allocation. We do a simple portfolio with just 3 positions. We either have shares of the ETF symbol SPY, which represents the S&P 500. We also do SPY options, and we could be in cash. Currently, this is our breakdown on a percentage basis where we are currently invested. We start the year off with $100,000 and we build our portfolio from there. We compare ourselves against the benchmark. The benchmark is the S&P 500 buy and hold investor. Their portfolio is up 17.83% year to date, which is a very good return. And we are lagging behind them by a full 10 percentage points. So we've got our work cut out for us. Last week was not a good week for my model portfolio because I was positioned for the market to go short. And instead of the market going short, it went long. I got whipsawed, and as a result, my returns are showing the results of those decisions that I made. And let's go through the presentation. Here are some past returns for SPY Trader Now, 2022, 21, and 2020. Really good returns. You want to see how I do this? You can go ahead and hit that subscribe button, ring that bell, and smash that like button down. Last week, the S&P 500 gained 2.55% for the week. These are weekly candlesticks, and there's last week's action. I'll go through the charts in much greater detail throughout the presentation. Last week, we made absolutely no trades. Here are some trades for 2023. The yellow represents open traded positions, and I just had to fill in with where the current prices are as of the close of business on Friday for the stock exchange. So this should all be up to date. Here is the equity curve for our model portfolio for year-to-date 2023. Here is the equity curve for the S&P 500 year-to-date 2023. And here are the two equity curves combined. Now, last week, our portfolio was here and the S&P 500 was here. I was expecting the market to correct further down. It did not. It went up, and because I was positioned to profit off of the market going down, that is why my portfolio went down instead of up. So that's what happened to me last week. Here is the Fed Chair, Jerome Powell. These are interest rate hikes for 2022 and 2023. The last interest rate hike was July 26, 2023, 25 basis points. The calendar for the FOMC has the next announcement on September 20th. It's about 2 weeks away. The expectation is that we're going to skip. We're going to again skip this one and then possibly do another 25 basis point rate hike in November 1st's announcement. We will have to wait and see on that, and we'll have to wait and see on both of them. Now we are looking at things from the presidential election cycle theory, which states, depending upon the year of the presidential election, will determine historical rates of stock market returns. Currently, President Biden is in his 3rd year. Historically, that has averaged 16.3% return on the 3rd year of the presidential election cycle. And currently, the buy and hold investor is up 17.83%. So we're starting to get a little top heavy compared to historical averages. Now we're looking at things from the bond market. We still have an inverted yield curve, and we need this to correct, and we still are in a rising interest rate environment. Now we are looking at things from a valuation standpoint, and we have fresh data because at the end of each month, CMV, where the link is here, everything that I'm presenting, look in the description if you want to click on these links yourself. And that way you can go to every single page that I'm presenting here in the presentation. So we are overvalued by 53.6% above the modern era market average of 20.2 on the PE ratio. That puts the standard deviations at 1.4%. So we are definitely elevated. Not as elevated as 2000 when we were actually exceeding slightly 3.2 standard deviations before we had that massive correction down. Now we are looking at CNN Business Fear and Greed Index. Here is our friend Warren Buffett. Currently, we are at 56, just between neutral and greed. Last week, we were at 47, so greed is increasing. Now we are looking at things from a seasonality outlook. Currently, we are in the month of September. We just started the month. And historically, going back 20 years for the S&P 500, historically, 65% of the time, that has closed higher at the end of the month than when it opened the month. Currently, we are up for the month 0.19%. Now we are looking at a 20-year monthly chart, S&P 500, very long-term chart. You can see the nice bull run that we had since 2009 all the way to 2022. Correction broke out, hasn't looked back yet. We were in an unsustainable trajectory. We've corrected down, but only slightly down. MACD crossed above its signal line. Now it looks like it's heading parallel to the signal line. Slow stochastics clearly has topped and is getting ready to travel down below its signal line, but it is still above 80. All very, very bullish. And this whole thing tells us that over the long term, this is bullish as long as we don't cross this line or this line. Now, this is an intermediate term outlook going back 5 years, candlestick chart rather, and these are weekly candlesticks, and this is a weekly chart. And here you can see in the thumbnail where we came down and then we bounced out. And then last week was just an incredible up week. But what I'm seeing here is a lot of resistance points. We have the old high here that is now going to act as resistance. Once you break out, it acted as support. Last time that we did that, it didn't last but a week before we closed back down below it. So it seems like it's possible that that's going to happen again. On the weekly intermediate chart, the MACD is below its signal line. And if we stay there, meaning that this is going to not go above this point here, and it's going to come back down, that's going to be bearish for the next few weeks. So I really need to see next week's action to determine how all this is all going to play out. But we have this high here, we have this high here, and then we have the all-time high here going back 2022. All of these things are going to act as resistance. So I see somewhat of a limited upside of a maximum of 20 points before coming back down. Plus, we have the seasonality in our favor that shows that we're not going to make really good gains over the next 2 months. Now, this is just a 6-month chart, S&P 500, and this is a daily candlestick chart. So you can see the bars nice and clearly. We were coming down here, we broke out, and now we are in this upper range, trading channel right now. So from a short-term basis, as long as we stay in this channel, we're going to keep going up. But we do see resistance points close by. So 451.19 is where we currently reside, and then coming up here at about just under 460. So we've only got 9 points here before we start seeing some forms of resistance going to potentially take hold and have this market move sideways or down. Now we are looking at a ratio chart against the equal weighted S&P 500 to the normally weighted S&P 500. We're monitoring this because after the MACD has gone below this line here, which it's only done 3 times in the last 20 years, after the MACD has gone positive, which it has done here, here, and here, shortly after that point, nice bull market takes effect. We want to make sure we are well positioned for that. But before we do get to that point, usually there's some sideways action on the ratio chart. Right now, we have some sideways action, but not as much as the past 20 years. So we want to keep watching this. The MACD crossed above its signal line, then it looked like it was going to go back down and cross below it, do a little bit of a whipsaw there, a little back and forth before it begins to take hold and go up, which I would not be surprised for it to take place. So we're watching this closely. Now we are looking at the VIX volatility index, or the fear index. We are at rock bottom levels. Here you can see how these are low levels. 13.09. So and the VIX works inversely to the S&P 500. So you notice when we were down here last time, you had a small correction. The black line here is the S&P 500 as depicted right here. So the last time we were at that 13 level in June, then we had this correction. Then we moved here, had a small correction here. Then we moved over to here, and then we had a decent, fairly decent compared to these other two mild corrections. Point is that we've had some correction. Now, right now we've gone down. So this looks like it's going to have some form of a correction, maybe a small one, maybe a little bit of a bigger one. Right now, our portfolio is positioned to profit when the market goes down. So, well, let's see how next week brings out. But this chart, it's very possible that we could get some sideways action here and like we did here. Now, the last time we had sideways action here, the market did advance. When we had sideways action here, the market also did advance, but then ultimately corrected and came back down. So here we are now, and we're watching MACD heading down, and slow stochastics has bottomed, but it's getting ready to cross above its signal line. If that starts going up, and if this starts going up, this VIX is also going to go up, bringing the S&P 500 down, which my portfolio is currently positioned favorably for that to happen. Now we are looking at the Thinkorswim platform, and we have standard deviations, +2, +1, the midpoint regression line in dashed green, -1, and -2. And we also have a measured move here. I'm going to show you that when we get to the 3-month chart. You'll see that measured move quite clearly. But we just want to see how we are doing here. And currently on the standard deviations on the 1 year, we're at 0.4 standard deviations. Now we're looking at the same chart, but instead of 1 year data, it's only 6 months worth of data. And on this chart, you're at the negative 0.3 standard deviation. You're below the regression line here. And you can see that measured move that I talked about earlier in the 1 year chart, but you're going to see it really clearly in the next chart. Okay, so what happened is we had a low here, then we came to a high and then corrected down. Only 1 day, but still. And so I put in a measured retracement here, or like a Fibonacci retracement. And when I did that, it puts in the 127 and the 161.8. So it puts in those lines, and the probability of hitting the 127 is very high. And there is also a probability of hitting the 161 depending upon the strength of the market. Then after that, usually you correct back down. We've already broken the 127, but we have closed below it as of Friday's close. So it's possible that that may have been it, and now we're going to come back down at least over here to the -1 or something like that before getting hold. So this is what we are hoping for, that the market will actually come down, because that's how we are positioned. Now, just gave you a lot of information in this presentation. Now comes our critical thinking. What are we going to do with that information? Well, as of September 2nd, 2023, the market summation, according to me, Ken, your host with SPY Trader Now, the market was much stronger than I had expected. The pullback that I was looking for never happened, and my return reflects that. Now the VIX is at rock bottom, and we still have seasonality weakness on our side. for the market softening and going down. I will keep my trades as is for now, and I'm just going to watch next week's action to see if I should make any changes. Overall, I'm expecting weakness till the end of October because of the seasonality, and then strength till the end of December. So generally speaking, that's how I want to position my portfolio. But if this market has unresounding strength and breaks out and makes new highs and keeps going through all those resistance points, I'm going to have to get out of my positions and definitely get some calls in my portfolio. But I got to see all that happen. Even though we had a good week last week, I still need to see more strength for me to get more bullish in this market. So that's it. I hope that I gave you some valuable information in this video. If you have not done so already, go ahead, hit that subscribe button, ring that bell, and smash that like button down for me. I thank you, and I wish you good trading.